Mortgage, of course, you see that is now the most common method that people are using in acquiring properties, especially if you're buying a house. Because let's say you want to buy a property of 8, 9, 10, 15 million. It's rare that you will find someone who has that cash in the bank that is going to pay. So of course, you'll need to go for a mortgage. But the advice I give clients is that a mortgage can be good. What you need to do is to make sure that you have done your financial calculations well. Because you see, let me tell you, with financial institutions, the moment you started defaulting and they keep warning you, and the defaulting continues, they will auction the property. So don't just get into the mortgage without doing the proper financial calculations from your end. You ask yourself, if I'm going to take this mortgage, what is going to be the monthly deductions? Then you look at your sources of income and you ask yourself, can I afford to have these deductions done monthly? And because you see, a mortgage is a long-term thing, you might find you are paying it for 10 years, 15 years. Am I going to afford to pay all this amount of money monthly for the period of 15 years? If you feel that it is something you can afford, then you can go for the mortgage. But if you feel you are going to have a financial strain, then you better think twice before you go to the mortgage. You can, look, which one is better? Is it getting into the mortgage right now, you become strained and you lose the property entirely, right? Or is it you maybe increasing your savings after some years so that you can get to the point whereby you have a larger deposit and the mortgage you are taking is smaller, such that you can now afford to pay the monthly payment? So it is always better to get ready financially. Don't rush into it. Because if you rush into it because your friend Mr. Simba has bought a property in Kilimani, and you also feel pressured, I also need to, then you get into that arrangement. You don't know how your friend has arranged himself financially, right? Then you end up losing the property. The other thing that you should consider, because like right now, mortgages some years ago, actually up to about a year ago, the rate of interest you could get around 10, 11, 12, 13% rate of interest. Right now it has shot up. It is at about 17%, except these are affordable housing. Affordable housing, you can still is at about 9%, yes, something like that. But it has to be a property which is valued at 9 million and below, these cheaper properties. But if you're buying an apartment of 15, 20, 25 million, then you are not within the bracket of affordable housing. So you pay the market interest rate, which is 17%. 17% is very high.
It's very high.
So if you have not done your financial calculations properly, chances of you losing that property are very high.
Isn't it?
Yeah.
Pretty much. Good.